Okay guys, so in today's video we are going to discuss IFRS 16, which is a contract of lease. So let's go to the question paper that I have, so that most of the principle I'm going to introduce them when we are doing a discussion according to the question paper that we have for this part 1 of today. Okay, question 3, it was 24 marks and we have 43 minutes to answer this, but we are going to take less. Okay, they said that number 1 required, they said that with the reference of IFRS 16, discuss how Trojan Limited should classify the transaction above in its financial statement for the year end 31 December 2015. Then it's 9 marks for discussion. Then number 2, they said that we need to provide a journal entry to recognize the above contract in the financial record of Trojan Limited for the year end 31 December 2015. Then it's 15 marks to do a journal. Okay, we're going to start with number 1. Okay, number 1, they said that we have to discuss how we should classify this transaction that we are going to read. Okay, they said that on 3 January 2015, Trojan Limited entered into a contract with Rent It Limited that convey a right to Trojan Limited to use the machine RX1. The name of the machine is RX1, and they say that Rent It Limited does not have the right to substitute the machine RX1, and the contract is for 5 years, and Trojan Limited will in exchange pay amount of 225,000 per year, and the implicit interest rate in the contract is 12% per year. Okay, then they said that Trojan Limited has an option to purchase a machine for 80,000 at the end of the contract, and there is 90% chance that Trojan Limited will exercise this option. Then on 3 June 2016, it was estimated that 55,000 will be obtained from selling machine RX1 at the end of its useful life of 8 years. All right, now maybe before we proceed, let me emphasize this. It was estimated that 55,000 will be obtained from selling machine RX1 at the end of its useful life. The amount that we put it aside when we are calculating depreciation, we call it residual value. So 55,000 is the amount that we're going to sell this machine after 8 years if we own it. Okay, then we also have 80,000. They say that we have option to purchase this machine by 80,000 at the end of this contract of 5 years. And they also say there's 90% chance. So if chance is more than 50% and if chance is less than 50%, it's going to determine also the calculation that you are going to do. Okay, however, we are going to do that part when we do number 2 of calculation. Number 1, let's first discuss how are we going to account to that. This is IFRS 16. Number 1, we must discuss a contract. Okay, is there any contract between these two business? Is there any contract between Rent It Limited and Trojan Limited? Yes, there is a contract between these two. They agree that one is giving another machine and one is going to use a machine. Yes, we are going to say it. There is a contract. There is a contract between Rent It and Trojan Limited. Okay, then another part in terms of IFRS 16, they stated that there must be lease term. There must be a lease term. Is there any lease term? Yes, a lease term is 5 years. There is a lease term of 5 years because they said the contract is for 5 years. Okay. Also, guys, remember, you write a point, you discuss, you write a point, you discuss. Okay, you can discuss on your own word. Okay, There must be identifiable assets. Assets must be identifiable. We have to be able to identify that this is an asset. Obviously, it must meet the requirements of an asset, a definition of an asset. It can be tangible or intangible. Okay, in this case, yes, there is a identifiable asset which is called machine RX1. Asset is machine RX1, which is non-current assets, of course. Okay, then another one, if we are talking about a lease contract, there must be some payment. You can't give it for free. Otherwise, if you are giving it for free, it's not IFRS 16. It's some donation that you need to check other standard, not IFRS 16. When we talk about IFRS 16, there must be a payment. Okay. There must be a payment. Is there any payment that is being made here in this case? Yes, there is a payment of amount of 225,000. Yes, there is a payment of 225,000. Okay, I think we will discuss 1, 2, 3, 4. And the other one, let me check if we have another one. Okay, then after that, you need to discuss whether all the requirement of lease is met or not. So if you can see on this transaction, guys, you can agree with me that the reason everything has met the requirement. As you can see, the contract was there, a lease term, it was there, and identifiable assets, yes, we identified there is a machine RX1 and there is a payment. Okay, the last one, guys, is a right of use. Is there any right of use? Is Trogan Limited allowed to use this machine? Yes. Okay, but if you can check on this scenario, guys, they said that they said that they entered into a contract with Rent Limited that conveyed the right to Trogan to use a machine. Yes, there is a right of use. But when they proceed, they say that Rent Limited does not have the right to substitute the machine. It doesn't mean that there is no rights. For example, if you rented a car and they say that you should not exceed 160 kilometer per hour speed, which means that it doesn't mean that you don't have the right to use. There is a limitations, okay, but it doesn't mean that there is no right of use. So the right of use has met. Then now we can conclude that the IFRS 16 has met, which means that this machine must be recognized in terms of IFRS 16. Okay, then number 2 now. Now we have to go to number 2. Okay, number 2, we're going to prepare journal entry. The first one is to recognize the machine. And take note that when we recognize machine, we have to recognize it using a present value. As you can see in this calculation, we are not given any present value, which means that we have to go and do some calculation. Okay, I have to wrap this part so that I will be able to show the calculation. Okay, we have to calculate a present value. Okay, obviously you are going to use your financial calculator. You're going to have N, I, PMT, future value, present value is the one that we are looking for. This one. Okay, our N, a contract is 5 years. Our I is 12%. Okay, and PMT, how much are we going to pay every year? 222,000 per year, 225,000 per year. It must be negative so that you can get present value of positive. Then a future value, in this case, because we have option to purchase by 80,000 and the chance is more than 50%, because they say that there's 90% chance, which means that we must have what? A future value that we are going to pay at the end of this lease contract. But if the chance it was 20% or below 50%, you were not going to have your future value, because the chance of buying this machine at the end of useful life or at the end of the lease term is very low. Okay, if you do this calculation, guys, you are going to get a present value of 856,469. It's very simple if you are using a financial calculator, but some people, they prefer mathematical formulas. You can also do that as long as you get the same amount. Okay, now we recognize the present value, which means that now we can go to formulas. Okay, let's say it's a journal entries is debit side and credit side. Okay, our first journal, obviously we are going to recognize machine. We debit machine RX1 SFP, then amount is 856,469. 856,469. Okay, then we credit lease loan SFP. Okay, liability has increased obviously and assets also increase. Okay, then the second one we have to recognize, we can go to payment, which is very simple, of 225. Okay, which means that liability is going to decrease now. A lease loan SFP, because we make a payment bank. Remember they said that a payment will be made every year, which means that we need to recognize it up to 5 years. Okay, it's amount of 225,000, 225,000. Then after that we can go to depreciation or we go to interest. Okay, let's go to interest. Interest, of course, is going to increase liability. Interest expense P&L. Okay, we calculate interest using this present value amount. Then we said lease loan SFP. Then the calculation, it will be 856,469 multiplied by 12%. If we take it during the year, you must also account for a month. But because in this case, guys, we take it on 1 January 2015. Simple means that it's the whole year, because our year is ending 31 December. Okay, if you do this calculation, you will simply get interest of 102,776. 102,776. Okay, now the next step is depreciation. We're going to have depreciation and accumulated depreciation. Okay, how are we going to calculate depreciation? We are going to say our cost, which is present value, 856,469, minus, we have to account for residual value because the chance is more than 50%. Okay, we have to account for 55,000 minus 55,000. But if chance was less than 50%, we were not going to consider this residual value. Then if you do this calculation, you will simply get amount. Okay, it's amount of 100 and 100,184. 184. That's how you should account for IFRS 16. So I hope you learned something in part 1. Please guys, make sure that you subscribe so that you will watch another standard that I'm going to record, because I'm trying my best so that I can record all of them that I know. All right, I'm gonna see you on the next one.